All right, guys, welcome back to the Educated Home Buyer Live, where my goal is to help you buy right, borrow smart, and build wealth through real estate ownership and financing. So this week, Josh bailed on me earlier in the week. He's up in Tahoe doing a conference. Couldn't make it today, so it's just me. So today we're going to talk about some recent data with regards to inflation, with regards to interest rates, and then we will dive into some questions and hopefully get you guys some answers. So the main headline at the moment is obviously inflation, right? We received inflation numbers that were higher than expected. Expectations were 1.1% increase. We saw a 1.3% increase, and inflation is currently sitting at 9.1%, which is the highest reading we've had since 1981, 41 years, a year after I was born. So inflation is super high, higher than expectations, if you will. But the crazy thing is what we saw with regards to the bond market and interest rates. So initially, we saw some adjustments with regards to the 10-year moving higher. And then after the data kind of settled, if you will, we actually saw the 10-year retrace and ended up closing under 3%. So it ended up closing essentially where it started. It was down a little bit, but more or less where it started. At the same time, interest rates essentially moved flat. So was the market expecting the numbers to be high? I think the easy answer to that question is yes, but also the market's looking at it and saying, hey, listen, the Fed is now going to have to keep their aggressive stance with regards to the Fed funds rate, with regards to inflation, which is now, pricing in a 50-50 chance, just under 50% chance that they're going to do a full 1% hike at the end of the month when the Fed funds meets. So, or when the Fed meets rather, to discuss the Fed funds rate. So there's a lot going in there. And you might think, well, why does the market want to see, that larger increase in the Fed funds rate? It's because the Fed is doing what it takes to get inflation under control. And it's likely, also, I think the market is signaling if they do that and they continue to be aggressive, it's likely going to push us into a recession. And we've talked about, this before about recessions being deflationary by nature, which ultimately I think the market believes that inflation isn't a long-term risk, right? While inflation in the short term is a problem, the market's basically saying, hey, listen, we understand it's a problem, but we don't think it's a long-term problem. And therefore, rates kind of moderated, if you will. So that's really the big headline at the moment. If you're out there shopping for rates, obviously I wouldn't look at this information and say, well, I hope, rates are going to get better now because of this. I would still lock your loan if you're looking at the market, and unless you're somebody that's willing to take risks, lock it if you're comfortable with the payment. Don't play the games. And it'll be interesting to see what the Fed does, right? I think if the Fed comes out and does, I think it's either between this point of doing 75 basis points or a full 1%. And we saw Canada today, the Bank of Canada actually came out and did a 1% hike. So their super aggressive stance there, and that I think was the largest increase they've done in, I can't remember the number of years, but it's a big increase in their Fed funds rate. So it'll be interesting to see, but I think the Fed's either going to do 75 basis points or a full 1%. And if they do a full 1%, again, I think that's good for the market. It helps with that volatility, helps to give the market what they want, which is what we've talked about several times. So hopefully that is helpful. Not a lot of questions coming into the chat, but as it's just me, guys, if you want to just hear me ramble on, I will. Otherwise, put some questions in there and we'll answer them for you. So obviously got a lot of support here in the first couple of comments in the chat. I'm kidding, of course. Appreciate Jay coming in there and backing up a little bit. And I appreciate you guys being here. So if you're new to the channel, this is answering your questions about mortgage and real estate, giving you some guidance on the market, really to provide education so that you can make informed decisions as a buyer or a seller. It's not to get you to buy a house. It's not, this isn't my me coercing you into doing something. It's, hey, listen, if you're thinking of this or you have questions about this, that's where we come in to answer those questions. So appreciate that. So what do we got here? So 1% rate is now at a 60% chance, Eric is saying. So, okay, so it's moving up considerably because it started at 40 or started actually significantly lower. I think like 16%. They moved up to 40, maybe 2% last I saw, and now it's at 60%. So market is pricing in a 1% hike, which is here's the caveat to that, guys, is that if the market or the expectations get to a super high percentage of 1% and the Fed comes out and does 75 basis points, while 75 is aggressive for what we've seen the Fed do in the past, if they come out and do less than what the consensus is, that's not going to be good for the market, right? Because that provides additional volatility. It shows that, hey, listen, is the Fed really, trying to get inflation under control? And then that is where we start to have issues. We saw the 10-year and the 1-year invert today. So we've seen the 10 and 2 invert. We've seen the 10 and 1 invert now. So the only thing keeping us from a recession at the moment is the fact that employment is strong. And I think, we're seeing companies at the moment, not necessarily, well, we are seeing some companies lay off employees, but we've seen a lot of headlines about companies basically halting the idea of hiring new employees. So you're likely going to see that reflected in numbers coming soon. So I think we have initial jobless claims tomorrow. So if we start to see a weakness in the employment numbers, it'll be interesting to see how the Fed takes their stance, right? Because one thing they've been able to be aggressive on the Fed funds hikes because that employment has remained strong. But if they start to see employment tail off, then they're going to be less aggressive in how they raise those rates. So let's talk a little bit here. So I'm going to just dive into some questions, and then as some comments come in and spark some thoughts, I will put it out there. We always talk about inventory here locally where I am, inventory in general. So we know inventory is rising. I don't think that's a surprise to anyone. We've seen demand drop off. Also, that shouldn't be a surprise to anyone just because of where affordability is. But also seasonality is playing a part in that, right? You might not want to admit that, but this is typical for this time of year for buyer demand to drop off, not at the levels that it has, but you can't just look at the number and say, okay, buyer demand is dropping and think that's, the telltale sign that the market's changing. It is changing, but understand seasonality does play a part in that. And this is always a time of year where things start to slow. And that's playing, that's, making the numbers probably read a little bit higher than they would otherwise. That affordability issue and interest rates being higher, but we've seen interest rates kind of moderate a little bit, right? The highs were 6.25. We've seen them come back down to around 5.75. And that's where they've been trading for, the last week or so, which is, good, right? We're not seeing these continual increases. That's good for the market. So with that said, I did bring up some information here. So this information comes from a local report that I subscribe to. It's called Reports on Housing. And what I like to do with this information is just, again, it's my market. So if you're outside of Orange County or Southern California, it doesn't mean a lot to you. But what I say with regards to the comments can be applied to most markets out there because a lot of it is trending the same way. So we're going to throw this up here on the screen, and we're going to, or not, maybe not. Let's see here. We're going to throw it up on the screen like that. Can you guys read that? Let me know in the comments. I know I put it a little bit smaller, but I wanted to be able to read it myself here. So active inventory continued to surge higher, adding 312 homes in the past 2 weeks, couple of weeks, up 9%, and now totals 3,803 homes. So as I came on the show, so this is from Monday, this report, but as I came on the show, 3,856 homes on the market in Orange County. Started the year just under 1,000, or just around 1,000, if you will. Huntington Beach, where I'm located today, we're at 250. We started the year at like 60 or 70. So significantly lower, due mainly a lot due to the time of the year, right? We always see inventory go down, but also, right, all the pandemic people buying lowered the number of homes on the market. But what's important here, highest level of homes on the market since November of 2020. Here it goes on to read, last year, there were 2,528 homes on the market, which is 1,275 fewer homes than today. So we have more homes than last year, but we still have less homes than prior to November of 2020. But the 3-year average in Orange County, 2017 to 2019, was 6,708 homes. So 76% more than we are today. Demand, the number of pending sales over the prior month decreased by 151 pending sales in the past 2 weeks. That's down 8% and now totals 1,710, the lowest level at this time of year since tracking began in 2004. So less demand at the moment. Like we talked about a minute ago, affordability, also seasonality is playing its part in there. Last year, there were 2,761 pending sales this time of year, which was 61% more than today. But 2017 to 2019 average, 2,582. So that's 51% more than we have today. Let's see. Orange County listings at the current buying pace surged from 56 to 67 days in the past couple of weeks. So what does that mean? Days on the market are going up. Why are days on the market going up? Because homes are sitting longer. There's less buyers out there to buy those homes, right? Because some are sitting on the sidelines. Some got priced out of the market. Some are just waiting to see what the market does. There's more competition. Buyers are taking longer to make decisions. Therefore, homes on the market are going up. Now, this time of year, homes on the market always go up. But if we compare it to last year, 27 days last year, we're at 67 right now. So we're still in this slight seller's market. We're not the aggressive seller's market that we were a year ago or 6 months ago for that matter. So buyers, you have more flexibility in how you write offers, which is important. You don't have to do these, aggressive offers when you're writing them in most markets these days, which means you're not having to waive appraisal and all contingencies in order to get your offer accepted. That's important, and that's a good thing. It's a good thing for buyers, right? Buying houses without having to do any of this stuff, it was never good. We talked about that many, many times. For homes priced below 750, the market is still a hot seller's market, less than 60 days, with an expected market time of 41 days. So you can kind of see here as we go through these, I didn't highlight them all, but as you go up in price, typically speaking, the days on the market are also going to increase with them. But something I found, important down here is the luxury end, all homes above 2 million. So Orange County is obviously a wealthy area. 21% of the inventory on the market today is $2 million or above. So if we've got basically 4,000 homes on the market, which it's a little bit less than 4,000, but if you took 20% of 4,000, what's that? 700-ish, 650-ish homes back out of that number that most buyers don't qualify for. So the fact that you're looking at inventory levels increasing, yeah, they are increasing, but still there's 20% of those homes most buyers can't afford because of the price point. So if you're a buyer out there and you're having trouble finding the right home, partly due to, there's still not a lot of homes in certain price points. And so that is presenting a problem for buyers still trying to find property. Distressed homes. So for all of those people out there waiting for the foreclosure crisis, waiting for, the world to fall apart, both short sales and foreclosures combined made up 0.2% of all listings and 0.1% of demand. There are only 5 foreclosures and 1 short sale available to purchase today in all of Orange County. So 6 properties out of 3,856 properties were distressed sales. And I actually went back and looked at a couple of these, and they were all distressed prior to the pandemic. They all had notice of defaults a long time ago. So these things aren't recent. There's a lot of equity in the system. But there were 2,362 closed residential sales in June. So believe it or not, people are still buying homes. The numbers reflect people are actually closing escrow. But that's 33% less than June 2021. But here's the thing. The sales to list ratio was 101.5 for all of Orange County. So that means that homes were still selling a little bit above the asking price for, Orange County. But understand, they closed in June. They likely went into escrow sometime in April and May. Rates are pretty much where they were in May, maybe a little bit higher, but the market is continuing to change. So thought that would be helpful to provide a little bit of context as to what's happening here. But let's get into some questions now. So let's see. Alice asked the first question, said, let's see, what's the difference between a bank credit union rate and the GDP rate? So GDP rate, so that's gross domestic product. So there's not actually a rate there, if you will. So maybe you're talking about the Fed funds rate is what I'm thinking. But the biggest difference is the Fed funds rate is what banks lend, is the overnight lending rate between, what they borrow money at. So it has nothing, it's not directly impacting mortgage rates, right? Mortgage rates are impacted by mortgage-backed securities. But nevertheless, if you want to follow something out there, the 10-year is probably the most closely followed measure with regards to interest rates. Josh would come on here and say it's like, what does he say? Walking the dog, right? The walking the dog on a leash. It's never going to get too far in front or too far behind you with regards to that measure. So the two aren't correlated at all. But here's what I would say. If you're, and I mean the Fed funds rate and interest rates. So if you're considering getting a pre-approval or going through that process, talk to a credit union, talk to a bank, right? They're not the same, right? Credit unions often keep loans on their books. They don't necessarily sell them to a secondary market. So sometimes credit unions have more aggressive rates than a bank, but also get a quote from a broker, right? Brokers have access to credit unions. They have access to banks, and oftentimes these rates are considerably better. I will say, Josh has access to a credit union here in Southern California that has the most aggressive interest rates I've seen on any product. And there's only one person that has access to these rates, and it's through a company that he uses. So, in talking to him versus another bank, you're probably going to get a lower quote on that rate when comparing it to others. So just make sure you're shopping around and having those conversations. Always a good thing to do. All right. Eric says 9.1% inflation reading today. Will that affect the housing prices with core inflation continuing to reach new highs? Will we get Paul Volcker? I can't even say that. So here's the thing. I think, again, the market is pricing in the idea that long-term inflation isn't here to stay. That's why rates didn't move as much today, because they believe that the Fed is going to continue to raise the Fed funds rate and be aggressive, and therefore, it's going to likely lead us into a recession, which is going to help bring inflation down anyway. So, core inflation was a bit higher, but I think it was like 0.1% higher versus what they expected. So not significantly higher. But what we saw with regards to oil and, just for CPI was, the reason the CPI figure jumped so much is because I think oil was up 11.6% or something. Crazy high number. Question, can you tell us some great down payment assistance programs? So here's the deal, Kim. Depending on what state you're located in, those programs are going to be different. Some states out there have more aggressive programs with grants and different things they can offer, whereas California doesn't really have anything. Now, you might hear of programs out there in California that are available. The problem is most of the down payment assistance stuff was cut years ago when they went to balance the budget. The first thing they cut was this down payment assistance program. So while the programs are there, they don't have any money to actually lend. Cal HAFA is one of the ones out there that still has, an opportunity to help you with down payment assistance. But understand, most down payment assistance isn't free money. There is some sort of repayment that goes along with it, but just find a lender in your state that understands down payment assistance, that works with it, and they can give you more guidance. There are states like Texas, there are states like Georgia that have a lot of down payment assistance programs, hundreds of programs. And so if you're in one of those states, there's a better opportunity to get it. But with that being said, I put a link on the bottom of the screen right now. You can go there. I'm happy to refer you to an expert in your state that, understands mortgages and likely knows about down payment assistance. So hopefully that is helpful for you. All right. 3-putt bogeys, always here every week. Appreciate you being here. Thanks for all the info. Closing next week. Super excited. You guys are the best. So appreciate you being here. Appreciate, obviously listening to us ramble on. The goal again isn't to get you guys to buy a house, but it's really to just provide information, talk about home ownership, why it's important, and help you, not make the decision for you, but provide some context on some of the data out there, right? Because if you just read the headlines, it's almost like the world's falling apart. And we all know market goes through cycles. This is a cycle. Things will continue, things may get worse, probably will get worse, but at some point they're going to get better. And so you've just got to make the right decisions for you. So you made the right decision for you, and we appreciate that. AJNL Fair. Hi, Jeb. A friend in Carlsbad is given after house has set on the market for 30 days. How can sellers have realistic expectations? Didn't average used to be up to 50 days or longer before this market? Oh, okay. So maybe a friend of yours has given up in Carlsbad after his house set on the market for 30 days. Yeah, I mean, here's the thing. I mean, back in 04, 07, 08, when the market, we saw when it crashed, if you will, we saw homes sit on the market 150, 200 days. I mean, homes set on the market a very, very long time. And there were different conversations happening with sellers at that time. Here's the thing. I don't know that we're going to see 200 days on market, but as we continue to move throughout the rest of the year into the fall, homes are going to sit longer. They are. Why? Because there's, we've talked about these things, but it's just typically the time of the year when things slow down, when kids get back in school, there's less home buying because parents don't want to move their kids during the school year to a different district or what have you. And that's not the same for everybody. Not everyone has kids, but you start to get the seasonality from the holidays coming into play. People are thinking about Christmas and Thanksgiving and all of this stuff, and less, worried about selling their house. And even then, we've seen the last couple of years, less people, putting their homes on the market during this time of year, worried about the pandemic and COVID and people getting sick. That's still in a lot of people's memories out there. And so you're going to have some of that playing into this year, and the market's going to be slower, and with a slower market and, and inventory building, you're going to have homes sit on the market longer. So did the average used to be up to 50 days? No, it's been way more than that. But you don't start to get what they call a balanced market, a fully balanced market, until I believe like 120 days. But as you continue to move closer to that, the more balanced it becomes for sellers. So or for buyers rather. We're already in a position where it's way more balanced than it was 6 months ago. And that's going to continue to get better. But that doesn't mean you can go in and offer significantly less, right? We've talked about clients that I have that have tried to offer not significantly less, but offer a decent amount less, and they're not even getting responses. And why am I even submitting these offers? It's more to prove a point to some of these buyers, like, hey, that's what you want to do? Okay, let's just see what the market's got. I've been wrong in my career, right? Somebody want to offer less and it ends up getting accepted or whatever. It doesn't happen often, but it does happen. So, if a client wants to do that, I'll do it. But oftentimes it doesn't result in a transaction where that goes into escrow, right? Many times we're not getting a response like we, over the last couple of weeks in some of these offers I've submitted, they haven't gone anywhere. On top of that, like I mentioned, I don't remember if it was on this show or one I did on somebody else's channel, but this past week submitted an offer in the mid 1 millions, 1.4, actually a little bit higher than 1.4. And there were multiple offers on the property. After it had been sitting on the market for a period of time, right? Ended up being multiple offer situation. And we ended up more or less at the asking price on that transaction. So just know your market and know what's happening. David, a lot of inflation questions. So do I foresee inflation continuing? Yeah, I think inflation is going to continue. But is it going to continue at the numbers, the increases that we've seen? I don't think so. I think the Fed funds rate and the slowing of the economy is going to bring some of those numbers down. But we're going to have inflation for probably a couple of years. Now there are people out there that believe, inflation by mid next year is going to be in the low 2-3% range. I don't know that that's the case, but I think within the next couple of years, you're going to have, inflation back somewhat under control. I don't know if we'll, be back at 2%, but it won't be reading 8% in my opinion. So, or 9.1 for that matter. Courtney, what value does a mortgage and 2.75 interest rate compare to what's available in the market today? Thanks for all your help. I don't understand the question. What value does a mortgage? Yeah, maybe you can help me out and clarify what you mean there. Let's see. Do I think home prices in LA continue to come down if interest rates go up? Buy now or wait until next year? Home prices could come down a little bit. I'm under the camp that home prices are decelerating, which essentially means that you're not going to see the year over year increases. At the same time, it really comes down to where is a seller pricing that property to start with. Are they pricing it based on where the market is today, or they still have this false reality that they can price it where it was 6 months ago? Because if it's 6 months ago, you're going to continue to see big adjustments down on some of these homes. But if you're seeing property priced where the market is today, you're going to see less of those price adjustments and less decline in prices. But with that being said, I think things are going to moderate for some period of time. But buying now versus later, can you find the right house now that meets your needs? Does the payment make sense to you? Those are the things you got to think about. Like I've mentioned several times on the show, my wife and I would still love to find the right property. It's just not out there for us. Although another one came to the market this week and it kind of matches a lot that we want outside of one thing. It sides a street that I don't really care to side. I don't like the idea of noise. I don't like the idea at some point in the future when I go to resell it, that's going to be a problem for buyers, for a lot of buyers. But it's in a highly desirable community and a neighborhood, and it's been nicely done. So that's a property that kind of fits us. So the question is, would I buy it now? If it didn't have the street beside it, I think I probably would. Now, this is a property that's probably going to have multiple offers and get bid up. Am I willing to go crazy on it? Probably not. Not because I think the market's crashing, just because I'm in a position where I don't really have to do anything, right? I'm comfortable with my mortgage payment, super comfortable. I bought my house some time ago. My mortgage payment's super low. I have a lot of equity. I don't need to move. I want to move, right? And so if the right property presents itself, I'll make that decision. But I'm not in a fearful camp of, I'm not buying today because I think prices are going to decline. I'm not buying today because the right house isn't there. My plan is to buy a property and be in it for the next 10 plus years, right? I've got growing boys. I've got, we're a house where there's always a lot of kids outside of my 3 kids. And so having more space is desirable for me and my family. Those are the decisions we make when purchasing property. We're not, and can I afford the payment? Am I comfortable with that payment and doing that? I'm not making the payment or making the purchase based on what I think the house is going to be worth tomorrow. And it's okay if you are thinking that, but just don't let that be the reason you make the decision. As long as you got a longer term time horizon, you're probably going to be okay with regards to being able to, sell the property at some point in the future, or whatever your reasons for buying are. But I'm not buying for the reason for the house to go up. I'm buying because I need a bigger house and I want to be in this area. So just my thoughts on that one. So you got to make the decision for yourself. James says, my opinion, where do you see rates at the spring of 2020? James, I'm not willing to go out there on that one just because I've been wrong on interest rates. Obviously, back in the spring, I did say I didn't think rates would go above 4. And I didn't expect Russia to invade Ukraine and all the issues with oil, which created additional issues and, inflation going high and the market not, liking what the Fed was doing and volatility, and that caused a big jump in rate. So there's a lot that goes into these things. So when I go out there and I say, this is what I think, then everybody comes back and says, well, you were wrong because, of this. Well, yeah, there's always events that we don't know are going to happen. But I think there's a chance that I will say, I think we've seen close to a peak in rates. The peak was so far has been around 6.25. I don't know that we'll go much above that. Could we go as high as 6.5? Maybe. But could we trend back in the 4s? I think there's a real good possibility that could happen, just based on, what's happening in the market right now, how the market reacted today to, the CPI and expectations for the Fed. Now, if the Fed comes out and backs off their aggressive stance with regards to inflation, that's going to cause rates to go higher. But if they continue to put their foot on the brakes with regards to the economy, I think there's a chance that brings rates down. All right, what do we got here? And keep in mind, guys, I don't have Jen Lego tonight either, so I'm really just operating one-man show, guys. So I appreciate you being patient with me. Richard said, what's the deal with sellers still wanting an insane amount of money? My neighbors in the Dutch Haven area of Huntington Beach want 1.2 for a 1,200 square foot home. Dude, nuts. So I actually had that conversation with somebody yesterday. They're buying a property near Dutch Haven, one of the Dutch Haven tracks, and it's quite a bit larger than that, that 1,200 square feet. And they were asking me, hey, what do you get for this price in Huntington Beach? And I was like, this is basically it. I'm like, down the street, there's 1,200 square foot homes selling, between 1.2 and 1.3 on some of these things. And yeah, no, it's nuts. But I will tell you, it's almost the entry level property in Huntington Beach at this moment. And is that concerning? A little bit, just because of, from a buyer standpoint, like if you want to live in Huntington, that's what you have to be okay to purchase. Or, the idea of if my kids wanted to live here, where prices are going to be from, my oldest is 10. So in 15, 20 years, when he's ready to own a house, where prices are going to be, if that's where we are now, it's insane to think that. But yeah, you can find, homes at $1 million or 1.1, but a lot of them are in that price point. So it's nuts. And why would a seller adjust otherwise, as long as the market, these homes are continuing to sell? That's the catch, right? As long as they're continuing to sell, there's no adjustment needed. Willing, I can't even read that right now. Let's see here. Well, I'm going to try to read this. Good evening, Wolf. Luis and Lego are gone. They bailed on me, man. Or female, one man. I don't know. I saw a picture of a woman at one point on your account. Maybe you're a woman, not sure. Sushi was fresh. Wolf, how do you get over self-consciousness in your cubicle when others can hear you talk on the phone? Oh boy, that's never an easy one, right? I still don't like that. I still don't like filming videos and people listen. I don't even like people watching my videos. Is that crazy? Makes me feel uncomfortable. I don't know why, but I appreciate you guys being here. Let's see here. Let's see. Let's say we purchase at 6% in 2023 and the rates fall to 4 to 5% within a few months after closing. How soon can we refinance? So Josh would tell you that typically it's about 6 months in refinancing, just because there's some recapture, on your previous lender. If you refinance sooner, I mean, literally you could refinance the next day as long as it made sense, but it's generally not going to make sense that quickly. If rates aren't going to go from 6% to 4% overnight. So it's going to take some time. So I would say 6 months is typically what you shoot for. And Josh, I think the calculation is you divide your loan amount by 125,000, and that's essentially what you need to save for it to make sense. So if you had a $500,000 mortgage, you divide it by 125. Or divide 125 by your mortgage, rather. That's 0.25%. So you need to save 0.25% on a $500,000 mortgage for it to make sense. So hopefully that's a quick back of the napkin calculation for you to help you out. But start asking that question as you start getting ready to buy in 2023, and maybe have a different answer for you. Laker J says, I bought a house in February 2022 with my then girlfriend. Unfortunately, it did not work out. We've come to an agreement that she keeps the Tesla and I keep the house. What do I do? All right. So here's the thing. You keep the house. She's still on the mortgage and probably still on the deed. You need to get something in writing releasing her ownership to the property. You can have her do a quick claim and quick claim her off the title, where you're just on the title by yourself. But she's still going to be on the mortgage. So that could negatively affect her in trying to do something else, qualify for something else. But ultimately, the only way to get her off fully is to refinance that property. into a new loan, which obviously you don't want to do at the moment just because rates are quite a bit higher. So I would say if you guys are cooperating and working together, then wait until interest rates improve. Hopefully they improve where it makes sense to refinance and get her off. Otherwise, you got to get something signed, basically releasing her ownership from the property. But the only way she's going to get off the mortgage is to refinance off of it. So that's somewhat of a conundrum, if you will. So your rate is at 6.49 non-QM bank statement loan. Is it even worth it to refinance? That's the second part of that. It could be, actually. I don't know where non-QM stuff is today. It may be worth having a conversation, honestly. If you click that referral link or go to that referral link scrolling at the bottom, it'll connect you with Josh here in California, assuming that's where you are. If you're out of state, it'll connect you with somebody there, and you can have that conversation to see if it makes sense to refinance and possibly get her off. Otherwise, you have to do with what I said a moment ago. Upland, California. So just getting to that. Yeah, have that conversation. All right. So Jason says, how long after getting a HELOC on a primary residence can you turn around and rent it out? I mean, you can do it immediately. The thing with, mortgages and there's no police coming after you to knock on your door to see if you are living in the house or whatever. You typically sign something saying some sort of owner occupancy affidavit, basically saying that you are going to occupy the property. Doesn't say you're going to occupy it for any period of time. So maybe you occupy it for a bit and then rent it out. But if they did find out for whatever reason, they could shut down that home equity line of credit on you. But there's nothing keeping you from renting out that property. So I would say you could do it immediately if you wanted, but I would suggest waiting a little bit of time and maybe taking that route. Mark's Google, who in the right mind is trying to buy now? People that need homes, people that are getting married, starting families, people that are relocating for jobs, people that are moving up, people that are moving down, people that want to be homeowners. I mean, there's a lot of people, right? Everybody's not just looking at the market saying, oh, the world's about to fall apart, because let's be honest, it's a lot of what you read out there is headlines, and you just got to read the context underneath it. We know that, again, the market goes through cycles. Things get good, things get, go bad, and then they get better again. So if you have that longer term time horizon, you can withstand that and not be so concerned with the day to day. Rain Yell. If an apartment building was built next to my neighborhood, can that cause the value of our property to go down? It could, yes. It depends on what type of apartment building it is. Are they high-end rentals in that apartment building, or is it lower-end rentals? Maybe even some Section 8 housing and that sort of thing. That stuff can negatively impact neighborhoods. So it really just depends on where you are. Now, if you're in a downtown, more urban area, probably less of an impact when this sort of thing goes on, because, that's what gets built in these areas is more high density type stuff. If you're more of a suburban area and everything else is houses, and then you got this coming on, more of a negative impact. But I think it comes down to the pricing, how nice is the development, what kind of people are renting it. Is it people with jobs and, higher end jobs and, you know, families, or is it lower income and, bringing in riffraff to the community? If that, it's going to have a negative impact. So just things to keep in mind there. All right. So we're 30 minutes in. I'd like to ask a favor. There's 237 people here. I'm by myself. If you wouldn't mind hitting the thumbs up, maybe subscribing to the channel, turning on the bell notifications to stay updated on real estate, right? The goal here is to educate, empower, guide, build wealth, borrow smart, buy right, all of those good things. That's the goal here. It's not to get you to do something you don't want to do. It's really just to provide you with the information to help you make the right decision. So do me a favor, hit the thumbs up if you don't mind. I would appreciate it. All right, let's see. All right. Did I lose my comments? What happened? Oh, here we go. Okay. Sorry, people. I'm trying to find where I was. Do you think housing inventory can reach 1 million or more by the end of the year? It's a good possibility. Yeah. I think housing needs to get up to like 1.5, 1.7 million to really have some balance, if you will. But yeah, I think there's a chance that inventory levels could reach there for sure. It depends. It really depends on what happens, as we move into the spring, or the fall rather, with rates and with just the general market overall, right? Have the majority of sellers come to the market already, or are they still watching CPI and this stuff, thinking about coming to the market? I think many are locked into their rates and locked into their houses and unable to do that because of where house prices are and where interest rates are. They just can't make that move, or aren't willing to make that move. And that's going to keep some inventory off the market. But at the same time, I think, the slowing in the market is going to allow the numbers to continue to build. So let's see. All right. So I'm kind of caught back up here. $500,000 home with 20% down payment, 3%, 2353, 10%, 4177. How will people be able to afford a mortgage on a home when rates hit 10% and their monthly payment doubles? Well, they won't hit 10%, so we don't have to worry about that question. Eric, condo versus single family. To each his own. Recorded a podcast on the Educated Home Buyer, Josh and I's podcast, where we actually talk about the differences in condos versus single families, the pros, the cons, the good, the bad. To each his own with this sort of thing, right? There's definitely pros to each and cons to each. So instead of answering a long drawn out question here, go check out that podcast. Again, the Educated Home Buyer. If you haven't listened to it, we take a deep dive every week into a topic, giving you our thoughts on it. Sometimes it's pros and cons like that. Sometimes it's talking about interest rates and, forecasts for the market. But it's a deep dive into that topic versus answering a bunch of different questions like on here. But we also take this episode that we're filming right now and post it on Friday. So Tuesdays are generally when we post the regular episode where we take a deep dive into a topic. And then every Friday, we take this and put it in audio form for you to listen to it at 100 speed. So it lasts like 5 minutes versus the 2 hours. Jeb, isn't there a half a loan down payment assistance that you mentioned in one of your videos, but it's truly free money to help you get it to? Yes. So I mentioned it a moment ago, not going to dive back into it. So if you have questions about CalHalfa, talk to a lender. Oh God, some of these people. We are currently comfortable in a smaller home. We own, but would like to upgrade to a bigger home in the future, but no rush. What market conditions should we wait for, if any? I think it's finding the right property and being comfortable with the payment, right? I think waiting for any particular thing to happen, a certain thing to happen is going to be difficult, right? It's hard to time the market. It's hard to time the top. It's hard to time the bottom. It's more making a decision based on where you are in your life. So I think that is the condition you need to wait for versus someone, worrying about, say, the market per se, and finding the right property for you, right? Like I gave the example earlier about me and my wife looking for the right house. It really comes down to the house. It has less to do with the market. I mean, I got to be able to make the payment and be comfortable with it. But I'm not waiting for home prices to hit a certain level or a certain number of homes to come to the market before I say, hey, this is it. It's more, hey, the right property, the right time, which is now is the right time. It's just the right property and the right payment. So am I comfortable with it? And if so, then I'm doing it. David, I don't know. What other YouTubers in California that are providing good education resources? So I don't watch a lot of YouTube, believe it or not. So I know there's, Matt, the mortgage guy, provides good stuff on loans. Jennifer Beeston also provides a lot of good information on loans. With regards to housing, I honestly don't know. I don't know. I mean, I know there's some people out there providing information, but honestly, most of it's garbage and fear based. So I don't watch that either, but I don't recommend it. So I honestly don't have a lot of good recommendations for you at the minute. Jason Walters, typically pretty level-headed channel, right? Just providing information, providing the data, and letting you kind of figure out what you want to do with it. So he could be a good resource. Outside of those, I got nothing. I got nothing for you. We are going to we're going to give Brian a timeout. What do you think about that, Brian? You are just going crazy in here. Thank you, Kim. Doing good. Appreciate you. Sophia, bought a piece of land in California. Should we wait to get a construction loan with cost of lumber and labor? Don't know, right? That's to you, right? Can you afford the cost of lumber and labor now? Does it make sense? Do you expect the cost of those to go down? I don't know. I don't honestly. I'm not. I don't think it's a bad question. I just don't know the answer, right? I don't know. Labor could get cheaper if we head into a recession, or I know a lot of markets at the moment are still having trouble finding good labor, good workers. Construction businesses are one of them, right? They have trouble finding people that actually show up and do their job, so that could continue to remain high. Lumber, I don't know that lumber is really going to go too far in either direction at the moment, just because there's still demand out there for remodeling and additions and doing different projects. So it's too difficult of a question, too many different factors in there to play in. Oh man, one thing I've learned on this channel, guys, after 2 years is that you cannot educate uneducated people. You just can't. You can try to provide logic. You can try to provide data. You can try to provide context with regards to what's happening with that data in real world situations that I'm going through with clients, and you still can't get through. So I've decided I don't know what to do with those people. So that's all. Just a side thought. Just thought I'd throw that out there. Just, what's on my mind. Since Josh isn't here to ramble on, I'm going to ramble on. All right. Let's see. Isn't lumber comparatively cheap to what it used to be? At the height, yes. Yeah, lumber prices got up significantly higher. I think it's down and trading in the 700s somewhere now, but it's still higher than it was when it was 400, right? So there's definitely an increase in it, but it's significantly less than where it was at the height. Would you personally buy a home in this market if you needed to buy a home? Yes. I've given you several stories on here where I've talked about it. Moonlight Sunrise, a name I haven't seen in a long time. Hi back to you. Good to see you here. Kim says, is it good to look into foreclosure soon? Sure, you can look into foreclosures. Understand, I gave you an example earlier. There's only 6 on the market in my county, Orange County, 3.3 million people, 3,800 plus homes on the market. And there's 5 foreclosures, 1 short sale. There's not going to be a lot of foreclosures anytime soon, right? A lot of distressed sales. There's too much equity. People could sell and walk away. That's not going to change anytime in the near future. So you can look into them, but understand when you see a property that seems to be priced below market value on the market, it is going to get interest. Not only is it going to get interest from people like yourself looking to buy a property and get a deal, it's also going to get interest from investors, people looking to take advantage of a situation, having cash. And so you're competing in these markets. The reason people were able to buy foreclosures and distress sales in 2008 is because they made up a huge portion of the market. We're nowhere near even close to that at the moment. So I think the idea of expecting to get a deal on one of these is, I think it's silly personally, unless you can find, a seller that directly that's willing to sell you a property. And even then, they'd be crazy to do it, unless they've stripped all the equity out in some way, which I don't know how they would have done it after we've seen a 40% increase after 2 years. All right. So, good question. When you and your wife buy a new, bigger home, are you planning on keeping and renting out your current one? So, the ideal plan is to keep the current home and rent out the other one. Why? Because I don't owe a lot on my property now. And if I rented it out, I would have a significant amount of positive cash flow coming in per month. And I could use that to offset my new mortgage payment. Here's part of the catch. In the price point that we're likely to be purchasing in, just because of where prices have gone and what I need for my family with regards to size and where I want to be location wise, I'm not comfortable with the mortgage payment on that property without putting a big chunk amount of money down. And I don't have a large chunk just sitting in the bank that's cash, right? I have some cash, but a lot of my money is in equities and stocks, and I don't want to pull money out of there for buying a property. So I would likely, depending on the price point, sell that property and use the equity in there to buy the up leg. Just because it would put me in a position where the payment is way more comfortable in doing that. I do it? Sure, I could do it. I just, I like being able to sleep at night, not having to worry about my mortgage payment, which is what most people should focus on when buying a property, right? You don't want to stretch yourself. I talk about it all the time. And I'm a single income family. I work, and my wife also works, but stays home with the kids and takes care of them. And so I'm the only income coming in. So with that being said, the price point that we're likely going to buy in for a primary, there's a chance we'd have to sell it unless something were to happen with rates being considerably less in the future. But or in the near future, and I don't know that that's going to happen. So hopefully that provides you a little idea of what I'm thinking. Let's see. Moonlight Sunrise came back on and said, closed on a single family home. Your videos are tremendously helpful. Thank you. Take care. So I appreciate it again. Appreciate you being here. Will home prices go down? My plan is to sell my home in the next 5 years and wait to decide on selling. So not sure if it's a good time to seek still and make a profit. Portland, Oregon. So sell and do what? What are you going to do with the money in the meantime? I mean, that's the question that I always ask. Are you going to sell the property and go rent something? Or are you going to sell the property and wait for home prices to come down? What if they don't come down? What if they come down a little bit, but and you sit on the sidelines and prices end up going back up? It's very, very difficult to time the market. It's hard to say what's going to happen in the next 5 years, right? We're likely to see a slower economy. We're likely to see home prices move closer to the long-term trend. There's a lot of economists out there expecting, single digit appreciation, even over the next year, 4 or 5%, 3 to 5%, somewhere in that ballpark. I think you're going to see home prices probably move down a little bit. There was another question up here asking something similar about where I see home prices. I think it was somebody, I don't remember the name right at the top of my head. Anyway, if you're asking about home prices, I'm probably talking about you. But I don't see them. Oh, Carlos, how much do you think home prices will drop in this? Like, I could see home prices moving down 5%. Some markets maybe a little bit more, maybe even as high as 10%, depending on what happens to inventory and rates. I think if rates moderate, and stay somewhere in this range, which is what I expect, I don't think you're going to see the declines much more than, say, 5%. Some markets aren't going to see that decline at all. Some will see a little bit more depending on where you're located. If you're in one of the markets that was strong prior to the pandemic, chances are you're probably going to be strong as we move forward. If you're in one of these markets, that wasn't strong, and the only reason that made it strong is because of the pandemic, maybe there's less of that going forward. So I think there's an opportunity for prices to pull back, but I wouldn't be selling my house waiting on the sidelines, waiting for that to happen. Because in the meantime, you got to find a rental or a place to live. And You're paying, at the moment, exorbitant amounts to rent properties, right? Rents are crazy. I think the average rent here in Huntington Beach at the moment is $5,200. Crazy. You know what that gets you? Like 1,200 square feet. It's stupid. You're throwing your money away. So, but you got to do what's right for you, and just make sure before you sell, you can actually find what it is that you're looking for, because in many markets, things are still tight. But I have a really good agent in Portland if you need a good agent. So that link across the bottom will get you in touch with them if you need to talk to them. Still got that on the screen. I forgot. There's nobody here to take it off. It's what happens when you roll solo. All right. So Eric says, in my market in Houston, inventory is now up to 2 months, the most since 2020, but still near record high prices. So yeah, I mean, that's the thing. Like, Houston is one of those markets where there's still a lot of area land to build, not in Houston proper, if you will, but on the outskirts of Houston. I actually did a live on another channel, and there was an expert there from Houston that deals with new construction. She said there's a lot of new construction just sitting on the market. Those builders are now willing to offer incentives and cut prices. So if you're in a market, I mean, you're saying only 2 months of inventory, so that's still really, really low. But understand it's likely going to change as some of that construction comes to the market and sits a little bit longer. And prices are probably going to moderate. Are they going to crash? I don't think so. But you're likely to see some changing in the market, some shifting. Cecil, I'm new in your channel. Thanks for your help and your information. What websites would you recommend to keep me updated on housing market trends? Really good question. So I think Housing Wire is really good. Now, most of these website or these websites require some sort of subscription after you view so many articles. But again, like if you're looking for kind of an unbiased opinion, just kind of facts on the market, that's, Housing Wire is a really good one. I read Market Watch, which is kind of general economics, talks a little bit about everything. I read Forbes real estate side of things. I read the Wall Street Journal. I read, what else do I read? I read Bloomberg. Obviously they have, their say on real estate. There's a really good blog out there, Calculated Risk, that puts a lot of really good information out there as well. There's a website called Mortgage News Daily that updates on mortgage rates, what's happening out there. And they also have a link at the bottom of their webpage where you can get a lot of the new data that's been put out in the market with regards to real estate. So that's a good one. You can also follow interest rates on there, get a good idea of what's going on in the market. Follow, just basic economics, follow John Malden, who, tends to be a little bit more bearish on the economy and on everything that's happening, but he provides some really good context on different things. So those are a few of them that you can check out. This is something that Josh and I've been thinking about putting together is a list of this stuff, because a lot of you guys ask for it. The American Enterprise Institute puts out good information on housing as well, just different information. So a lot of these websites, you got to kind of go with, and do some research and find out, but those are all good places to start. But just look for information on data and them telling you the data, and not looking for somebody telling you, their view of what the data is. It's right. You don't want to get into all of that stuff, right? You want somebody to provide a little bit of context, but once they start talking about crashes and all of that, then I would take it with a grain of salt. So AJNL says there's only 7 foreclosures and 1 short sale in San Diego County. So yeah, there were 6 here. That's some good information. So not a lot happening there. Let's see here. Here's a good question. Where did I just lost it? People. Let's see. Is Southern California a good place to invest in real estate? Are there many problems, or is it fine? So it's a great place to invest in real estate. The problem is what it costs you to invest in real estate, right? If you're looking at somewhere in the state of California, any investor, the question for any investor looking to buy real estate is, are you looking for appreciation? Are you looking for cash flow? It's very difficult to get both. Now with some short-term rentals and Airbnbs, occasionally you can get cash flow and appreciation, but going, that direction is tough. You can't bank on the short-term rental thing because things can change. You can bank on it, but you can also set yourself up to be in a bad position if you're only buying a house for the short-term rental, because if laws change, you could be stuck with a property that no longer works. But if you're looking for cash flow and you're looking in California, you got to put a large amount of money down in order for that property to cash flow. And because of where prices are, you're talking hundreds of thousands of dollars in order to buy property. Most people aren't rolling around with hundreds of thousands of dollars. If they are, California is great because you can get the cash flow, you can get the appreciation long term. But if you're somebody that doesn't have the big down payment, you're looking for cash flow, there's a lot of out of state opportunities out there where properties sell for significantly less, rents are high, and you can actually, with a decent down payment of 20, 25%, and we're not talking hundreds of thousands of dollars, we're talking, maybe $50,000, you can actually get a property that cash flows a couple $100 a month, and end up paying that property down over time. Use that money, put it towards the principal, and end up paying it down quicker. So there's different opportunities in how do you want to invest. California is great for what it is, but understand there's other opportunities out there too. What you could invest in one property in California, you could buy 3-4 properties out of state. But understand, a lot of those properties that you buy out of state, they don't appreciate. Right? In 20 years, they might appreciate 5%, 10% max, whereas California might go up 100% during that period of time, depending on what it is. So just know your market and know why you're doing it. And hopefully that helps you make the right decision. Housing bubble boy. My rent doubled in 2 years. Rent is nuts at the moment. It's crazy. Crazy. Let's see here. I'm still looking. All right. I'm trying to find something, guys. Please bear with me. If you got a question, put it in there. So Carlos goes on to say, a little nervous about bought a pre-construction back in February, closing now in August. I was able to lock in my rate at 5.5%. I was thinking about selling it and waiting. Yeah, I mean, selling it, if you end up selling it, you might lose money. What would be your reason for not just hanging on to it and continuing to make the payments? And, again, it's not an easy decision, right? Nobody wants to buy a house and immediately be underwater. I get it. Of course. But if you can focus on the monthly payments, live your life, and, just like a rent, when you rent every month, are you worried about the price of the house? No, you're not. You're worried about making the rent payment. I get it. Your house is your own thing and it's a little bit different, but worrying about what the price is going to be tomorrow or the next day, I think is silly. I mean, there's so many people that haven't bought in the last 5 years because, they thought something different was going to happen. And now many of them have been priced out of the market for that. Now I'm not pushing you to buy a house, but I'm pushing you to think, what is getting rid of that property and waiting do? Does it give you an opportunity? Maybe, but maybe it doesn't. And that's the thing. You gotta figure out what's right for you. It's increased by almost $80,000 in only a few months in Miami. So, yeah, I mean, again, if there's an opportunity to sell it, sure, go for it. But, remember, you make $80,000 or a portion of that, you got capital gains to pay, right? So you're not going to get all that money. Capital gains taxes are going to eat up a good portion of that profit. So, and you're going to have some selling costs. So out of $80,000, what are you going to walk away with? And maybe you don't need to walk away with anything to do it. Maybe it's just something comfortable to you to do. But those are things that you need to consider when thinking about that. All righty. So we are on 1 hour and 7 minutes. I am once again going to ask you to hit that thumbs up as I sit here and just talk randomly, answer your questions. I appreciate the support. I appreciate you guys being here. If you're new to the show, thank you. Typically we do this. I usually have a mortgage professional on here with me, an expert, Josh, my lender. And we talk about, the economy, the market. We also have a podcast that you can check out, the Educated Home Buyer podcast, if you like podcasts. But he's out this week, so I'm rolling solo, but we do this every Wednesday for typically 2 hours. So last year we did 96 hours of free education. This year we're pretty much on track to do the same thing. I think we've only missed maybe 1 week so far, so maybe 2 at the max, but we're on track to do the same thing. So if you hit that thumbs up, it helps us know that you like the stuff and to continue doing it. It does get repetitive. Sometimes it gets tough to do this. I'll be honest. I have this conversation with my wife often, just because it is so repetitive in the things that we talk about. And I realize a lot of you guys don't hear it often, and it's really hard to find good information. It really is. And you might be watching this going, who am I to trust you? And that's understood too. But it's about providing education. It's about providing value to you guys, and hopefully in return, we all get something out of it. That's the goal. Jacqueline, send me an email, or go to that link below, click on Realtor, and I'll be happy to connect you up in Portland if you need it. Dio the puppy. I'm planning to buy a second home as a primary residence in Virginia and rent the first house out, which is also in Virginia. Do you think it's the right time to buy a house now? Please throw some light. So go back and watch earlier in the show, Dio. I think if you're buying for the right reasons, for you, yes, it's a fine time to buy a property. If you're buying in the short, you think that you're going to buy something, sell it next year for a profit, or you're going to buy it and house hack because you saw another YouTube video on house hacking. No, it's not. It might not. It's not. I don't know that's ever the right time to buy a property. It's hard to think in the short term with regards to real estate. Real estate's a long-term game. Many people want to think about short-term. And over the last 2 years, unfortunately, people have been able to really get away in the short term. And it's changed the mentality of a lot of real estate because people have seen so much profit made. That's not normal. And at some point, we're going to get back to the trend, which means that you need home prices to moderate. In some areas that they need to decline to get back to that trend of, 4.5, 4.6% over the last 60 years. And so if you're in that position, you could be upside down if you're buying in the short term. So don't do that. Don't buy because of FOMO. And the reasons you put here, buying something out, renting my house out. Yeah, if it's the right time, sure. Why not? But throughout the show, we've talked on it several times in different scenarios, why I'm considering buying another property, all of that. So if you want it, don't want to watch us, go listen to it on the podcast. It'll be on Friday, The Educated Home Buyer, where you can check out that information in audio form only. I see stuff like this and I think so dumb. Like 50% cuts in fee. There's no house selling for 50% less in any market. Show me a house. My email, it's everywhere. If you want to email me something that sold for 50% less, and I'll be happy to admit I was wrong. In fact, I'll do a video with you where you can call me anything you want and tell. There's no world in which properties are selling at 50% unless the property was significantly overpriced to start with. So I see headlines like this and I see like, if you believe that, you're on the wrong channel for one. But Brian's been talking in here the entire time about how the housing market's going to crash. And like, unfortunately, Brian, like you're wrong. And it's if I'm the only person telling you that, then I'm the only person being honest with you. So with that being said, it is what it is, buddy. Yeah, home prices are going down, but nothing's getting cut 50%. Nothing is getting cut 50%. Anyway. All right. Stacy, been saving for a house for 2 years and appreciate your channel. I've learned a lot. So thank you for being here. Thank you for the support. Comments like that continue to make me create videos to help out, right? The channel started initially with the idea of educating, and it's morphed into housing updates and all this crazy stuff over the years because that's what people want to see. I know like based on the number of views and what gets, comments and likes, people want to see what's going on in the housing market. And unfortunately, that gets super repetitive. But I'm glad to hear that people are still finding, value in the content. Entering a counteroffer on a house that wants me to assume the solar loan of $49,000. Any advice on how to determine if that is good? So I'm probably not your guy when it comes to solar, because I am, like, we all have our biases on certain things. I have a negative bias on solar, because for most people, it doesn't make sense. It looks great on paper. It looks like a great deal when they say, listen, you have no, uh, energy cost, no electricity bill. Yeah, if your electricity bill is 5, 6, $700 a month, and you're spending $200 a month on solar, then maybe it makes sense. But what I generally find is somebody has an electricity bill of like $250. Their solar is $247, or 257, whatever, $247. So they're saving $3 a month to have solar panels on their house, which is going to take them however many years to pay off. And at which point they're paid off, half the stuff on there is going to have to be replaced because it's so old. I don't know. I'm not a fan of solar, especially assuming people's solar bills and I don't know. I've had too many problems with it when it goes to selling property that has solar, especially that have leases already. But you got to, again, so you got to figure out what that payment is per month. How much are the electricity bills? How long is it going to take you to recoup that cost? Right? If you're saving $100 a month on by having solar, but it's going to take you 20 years to pay it off. I don't know. Is it worth it? There are costs involved after some point where, you're going to be required for the maintenance. Yeah, there's warranties and all that good stuff. But what happens when you go to replace your roof on your house and you got to move the solar? And like, there's just certain things that people don't factor in. So unfortunately, I'm, a little bit negative on it. But it could be the wave of the future. I don't know. California's put different holds on different things. So I don't know. Yeah, that's where I'm at. So hopefully that helped you. I don't know that it did. So Fu Tao says no crash unless we have another black swan event. Prices are slowing down, though. Prices will stagnate and eventually slowly climb up. So I agree with that comment 1000%. There's nothing else I can add to that. That is exactly how I feel. Unless there's a black swan event that nobody is predicting. Eagle Eye finally starting to see some price drops in Honolulu, but very little. $1.5 million house, for example, price drop is $50,000. That's reasonable. Like, I have 2 properties here locally, selling in that $1.5 million range. And one, let's see, one, I've lowered the price over 100,000, and the other one I've lowered about 100,000. Now, both of these properties were priced high to start with over the last comparable sale that sold many months ago. So these properties were listed high, and it was more the seller trying to gauge, hey, what's the market willing to do? What, I'll adjust if I need to, but can I sell it at that? I don't want to underprice it against some advice, but against my advice in pricing some of these things. But hey, yeah, you're seeing some of this stuff. It is. Now, when you see a property that was priced at 1.5 and you see there's $100,000 price reduction on that property, does that mean it's selling for 10% under what the value was? Not necessarily. It might mean that at one point in time, or it might mean that the seller just priced it too high to start, and the 100,000 you're seeing, it should have been priced significantly lower to start. And what happens is when you price properties high to start with, and then the days on the market start to add up, and then on the top of that, you got the market changing and shifting a little bit. It just makes you being out of the market on that price that much more, or that making it that much worse, right? In having to lower quickly to get up to where you should be. So just keep that in mind. Let's see. Andrew. Let's see. What do I think about San Bernardino? Looking for my first house. I think it's like any other area. If you can find the right property and the right price point, great. San Bernardino, some of these markets, depending on where the prices are, depending on what your price point is, there's still going to be competition out there. Why? Because those people are still priced out of markets like Orange County and Riverside and some of these other markets, right? And so I'm not saying San Bernardino is less desirable, but homes are less expensive there. So, what we always say is those markets are the last to go up, and they're the first to be impacted when prices start to moderate and go down. But again, like any other area, if that's where you want to live and that's where your job is and that's where your family and what you do is, sure, that's where you should buy a property. But just, again, like anything else, you got to think longer term time horizon and all of that good stuff, all the stuff that we preach constantly. The I can't even say that. The Coridian. Yes, I got it. Not sure if you discussed this, but are you surprised, concerned with the recent 15% cancellation rate, a concern or sign of things to come? So 50. So for those of you don't know, there was a recent article put out by Redfin basically saying that 15% of people backed out of their contracts this month, right? Which was a record level. Now, that's super concerning until you look at what happened last year. Last year, 11% backed out. So 11% is still high, but this year, 15%. So it's a 4% increase, which is more. Is it concerning? It's not concerning. I think people, what I see is that some home buyers out there have been pre-approved for some time don't realize how much interest rates have gone up. And they get into contract and they realize, holy crap, my payment is much higher than I thought it was going to be. I can't do this. And so they end up backing out. On top of that, you've got all of these headlines coming out that people read and they get scared and they end up, taking a back seat to wanting to buy a property, and that backs people out. So I'm not concerned with it. I think it's almost, it's reasonable to think that people would be fearful and a little bit scared with all the craziness going on. So yeah, is it a sign of things to come? I don't think it's a sign of things to come, because I think as people get accustomed more to what the market's doing, there's less of people, backing out for that reason. There's just so much volatility and so many changes happening right now that, if you don't keep up to date on it, you don't really know what's going until you're right in the middle of it, which I think is what's happening. Jay Adams says, would selling a home and offering a $10,000 to $15,000 credit towards closing or a 1% interest buy down be appealing to buyers in this market? Sure. Can't hurt. But with that being said, you also have to be priced correctly, right? You can't be, 10% over the value of what your home should be and then be offering that and expecting a buyer just to jump on it. I think, those sorts of offers or incentives are way more enticing to when you're priced correctly, right? And having some context of what $10,000 to $15,000 actually gets you, right? How much does that buy your rate down, and how much does that rate buy down actually save you? Those are some things that your agent can put together in the form of a flyer for open houses. It can be put in the agent comments, the agent remarks for agents to see and pass that information along. Because all of these incentives and these things are great, but if nobody sees them or knows about them, then they get you nowhere, right? So you got to be able to provide a way to get it out there as well. But no, I think doing incentives in this market is great. All right. Let's see. Ever think about doing a live stream in a different location, properties, areas, showing comparisons, home inspections, contracts? Might spice things up. However, generally like the current setup. So yeah, I have. I've actually thought about doing a tour through a property and just nitpicking the hell out of a property, and bringing you guys what I look at when I walk through a property. Like as a realtor, when I approach a property, what am I looking at? because I feel like that's helpful. But at the same time, it's also one of those things that if that's your property as a seller, and or I'm, it's not, you don't want to see that information, and I might be shooting myself in the foot to some extent. So it's one of those things that's been a balance on creating, and also it requires me to have somebody else, film it, which and it requires me being outside the office and doing all these additional things for timing purposes and what have you. So if you feel like that's valuable, I'd love to hear feedback on it, because that's one of the things I've talked about. Not a tour, not taking you to a house I have listed. It's more walking you through as if you were the buyer and saying, hey, listen, these are things that I see. This is what you should notice these are things you should pay attention to as a buyer. And that doesn't mean they're bad things. It just means that, I have a property at the moment that's a flip, and there are several things in that property that I see as somebody that's detail oriented when walking through the property. The last thing you want to see as a buyer, or you want to have happen as a buyer, is not have any of these things pointed out to you, because buyers buy emotionally and they justify logically. What that means is emotions are high. They're in love with the property. They found the one, whatever. And then when they get in there, they start justifying why they did it. Yeah, well, it was but I see all these things, but it was this. Well, I don't want you getting into the property as a buyer that I'm representing and going, I didn't know any of this stuff. Like, you didn't point this out. I didn't see it. Now I got all these problems. I want you to know now. So just my thoughts. But yeah, I've considered doing something like that. Considered changing up the scene a little bit. Josh and I might go into the same room for these lives to have a little bit better flow and a little bit more bouncing off each other. So that's something we've thought about doing for lives as well, just to change it up and give you guys something different, so you're not staring at the same background, the same head every time. So would love to hear your feedback on it. It'd be good stuff. Alejandro says, on a purchase, when do you recommend buying the rate down? What if there are plans to add value and cash out refinance within the next 3 years if rates come down? So I wish Josh were here for this, because he's really good at telling you buy downs. I think if your plan is to keep that same mortgage for 30 years, never refinance it if rates go down, you're one of those people that will have the same loan forever, then maybe buying down the rate makes sense. But how much is it going to cost you to buy it down? How much are you going to save? How long is that going to take you to recoup that cost? Right? So buying down a rate 1%, right? So if you got a $500,000 loan, $5,000 is 1%, right? That'll generally save you about 0.25% on the interest rate. How much is that 0.25% going to save you in your monthly payment? How long is that going to take you to recoup your cost? 5, 7 years or something like that is typically what it is. So if you're going to own the property for longer than that period of time, not refinance if rates go lower, then maybe it's worth doing it. But if you're somebody that would potentially refinance if rates come down, if you're somebody that's going to do a cash out refinance at some point in the future, if you have some equity, then buy downs are sunk costs. They don't make sense to do, in my opinion. So I'm not a person that believes in buying down a rate. Now, in some instances, you have to buy down the rate, because just that's the only way you can get approved for the loan or whatever. That in that case, you have to do it. But if it's something you have a choice of doing, I'm against it, just because I think there is an opportunity for lower rates in the future. And I know the mindset of most people, they don't have their loans that long, which means at some point they're going to refinance or sell that property, at which point you've thrown money away, if you will. I got some people saying they would love to see it. So maybe that's something we can shake up. I got a good property for it. I gotta figure out how to tread lightly, if you will. Is there a reason people are currently more willing to offer seller concessions rather than drop down the list price? Doesn't that only benefit the real estate agent's net commission? Wouldn't that mean a seller is paying a higher tax on a higher list price? Who really benefits in this situation? So let's go back to the first part of the question. So the first part of the question is there a reason people are currently more willing to offer seller concessions rather than drop the price? Well, the main reason, again, we talk about this all the time. Prices are sticky to the upside, right? Sellers don't want to sell a property for less than their neighbor did or less than they think it's worth. So they're less willing to negotiate or lower that price in many cases, or maybe they're in a situation where there's something similar, that's on the market and they feel like they're priced in the right price point and don't want to be, go significantly lower. So, but therefore they're maybe willing to offer some incentives for a buyer to come in. Now, what I will say is that in this market at the moment, because of where prices are and where rates are, it's actually offering a seller concession to buy down the rate usually gives the buyer, if you were to lower the price, say $25,000, or give the buyer a $10,000 or $15,000 credit towards buying down the rate, the buyer's going to get a much lower payment by buying down the rate than they are by lowering the price in most cases. So it's a better deal for buyers in those cases to take the incentive and use it towards buying down the rate. Now, it benefits the seller because the seller gets to keep their higher price, and therefore they end up selling the property for more money and usually end up netting money. So it's kind of a win-win for both situations, but it doesn't always pencil out like that. And you need to run the numbers to help it make sense. And so if you're listening to this going, I don't understand what you're saying, it's easier to provide with numbers, and I don't have numbers in front of me to do that. But does it only benefit the real estate agent's net commission? Listen, if you're a real estate agent and you're thinking, if you're calculating your commission every time you adjust the price, then you're in it for the wrong reasons, right? I never ever think about my commission amount going down just because I'm trying to lower the price to sell the damn house. Like, I'm not worried about I make nothing if the house doesn't sell. So my goal is to sell the property. Therefore, I'm not calculating. So I don't think most agents go in with that mindset. Maybe some do, but I'm trying to get price improvements or, the idea that, like I have a property on the market at the moment. It's a 2-bedroom. The plan that they own offers the potential for a 3rd and 4th bedroom. Well, when the buyer originally purchased that property, they chose the 2-bedroom option with a loft. Well, that loft can be a 3rd and 4th bedroom. Well, what me and my seller discussed is, hey, listen, what we'll do is we'll adjust the price lower a little bit, but we'll also put comments out there that if a buyer wants the 3rd bedroom, we'd be willing to give compensation towards that 3rd bedroom to help them put up the wall to make the 3rd bed. It'd be very, very easy to do. So I'm not trying to keep the price higher. I'm trying to get the house sold. So I'm doing a combination of things in order for that to happen. So hopefully that's what makes sense. And who benefits? The seller benefits by keeping the price higher because they make money, make more money than typically lowering the price. The easy answer to this question, do I think rates will come down once inflation is under control? I do. I think I think we're headed into a recession. Recessions are deflationary. So I think inflation is going to moderate. And I think at some point the Fed is going to have to reverse course. Maybe not this year, maybe not even next year, but at some point they're going to have to do something to stimulate the economy again. And that's likely bringing interest rates back down. So I don't know when that is, when that's going to happen, but I do believe that. That's my personal belief, but don't use that to make your decisions. That's just me giving you my context. All right. You could do a walkthrough of a foreclosure to be less problematic. Yeah, there's none out there though. Like I can't walk through a property that's not on the market. That's the unfortunate thing, right? So there's not really any, and even foreclosures, somebody owns it. So it's like, when you film somebody else's property and then you put it out there for use like this on YouTube, and there's ads involved, and I make money, that it's just never a good thing. So it's got to tread it lightly. I'm not sure how I'll do it, but I'll figure out something. Let's see, what do we got here? So we are 254 people watching at the moment. Thank you guys for the support. Me being here by myself, I do appreciate it. If you'd be so kind to hit the thumbs up. Actually, what I'd like to do is get more thumbs up. thumbs up on this video than when Josh is here, right? Just to kind of stick it to him a little bit. Hey, Josh, you didn't show up. Jeb actually got more likes by himself than he does with you. Hey, listen, I think that's good, right? Just kind of, Josh, we don't really need you. Although it's good to have Josh on here. It's good to bounce back and forth. Me talking to a camera, staring in the camera the whole time. Guys, this is not fun. Having a little bit of chatter back and forth just makes things go a little bit quicker. Tonight's dragging on a little bit by myself. So anyway, you guys really did that, right? 20 thumbs ups, 21 thumbs ups very, very quickly. So you guys are awesome. I appreciate that. Okay, let's see what we got. So hour 32 minutes in. Let's see what we got going on here. Ooh. So can you explain how the home flipping market can be affected by a potential recession? So here's the deal. I actually put out a video. I haven't put it out yet. It will go out Friday morning on buying a flip property, what you need to pay attention to. Because you're going to see, I mean, there's a lot of flip properties out there now. You're going to continue to see them. And so if you're buying, whether you're buying a flip property or not, these are things that you got to pay attention to. So it's a good video for that. But how can home flipping market be affected by a potential recession? I mean, if you're holding a property that you're looking to flip and you haven't flipped it yet, and values continue to moderate and or move sideways or even down in some markets, your profit can be affected as a flipper. I think there's a lot of people out there buying property as investors thinking that, the market's still appreciating at a crazy pace, or maybe they're holding a property because they haven't completed it yet, that they bought to do it during good times, and markets have changed. So I think flipping out there is not for everyone. There's some people that are really good at it, can get a good deal on a property and know their budget and go in with their budget and accomplish that and do the remodel at that budget and sell it for a profit. But I think what happens in a recessionary time or in a market that continues to move sideways or down is that profits are affected in these situations. So getting, if you have a goal of getting a 15% return on buying a flip property, probably going to be affected, right? I mean, we went from a market where you were able to get 30% returns, 40% in some cases years ago, back in 2009, 2010, to now in this market, you're looking at 8-10% on some of these flips. Some are looking at higher margins or profit, but many aren't. And many people out there don't know what they're doing, is what I'm finding. And so that is the bigger issue. And so watch that video that posts on Friday, because I talk about it in detail. I feel like it's something I should have talked about a long time ago. Caroline says, suggest finding someone who recently closed on a house that needs some work. I just closed on one in the desert back in April. Someone like me would not have a problem. Yeah, I know. And that's good. I appreciate that. The problem is when you walk through someone's house and you nitpick it, like there's emotions that go along with that. And so you just don't want to be the bad guy. Eliza says, do you think it's a good time to buy a multifamily property? Sure. If it makes sense, if it cash flows. I mean, you got to, again, are you planning on living in one and renting out the others? Are you planning on buying multifamily to rent out the whole thing? It's a numbers game. I mean, if it's an investment, it really comes down to the numbers. Do the numbers make sense? Can you afford it? If it does, sure, great. Why not? If you're, buying it for other reasons, or you have a short-term mindset where you're planning on selling it in a year because you think it's going to profit, then maybe not, right? It's not always a good time to buy a house. And now you definitely got to be more cautious in this environment. Real estate with John. Hey, Jeb, thanks for the awesome insight. As our fellow realtor looking for some help in the process, is waiting till the last contingency days for a buyer to submit their RR a negotiating tactic? I don't do it like that, because, it can be a negotiating tactic. But at the end of the day, the seller or the seller's agent, the listing agent, could basically give you a notice to perform and say, hey, listen, you need to release this contingency by X, period of time. based on your original contract. And if you don't, the seller can back out. Now, can't back out in the middle of the negotiations, but if the seller's not willing to cooperate and forces the hand on a notice to perform, there's very little you can do. I think giving yourself an opportunity to go get some back and forth in there shows that, you're not waiting till the last minute, shows that you're more reasonable in your approach and that you're trying to work with the deal versus pushing the contingencies out. I mean, I guess the question would be, why would you want to push contingencies out? Like, why do you want to wait to the last minute? Is because the buyer's still getting cold feet? What is the reason for it? Because I think that's the more, the underlying factor that you need to consider in that scenario. All right. Dancing alone with rentals. The euro is down to record levels. Yeah, I think it's parity with the dollar at the moment, which is like the first time in 20 plus years. Money from overseas will continue to flow in the U.S. There's, I agree with that statement. Let's see here. Oh, so you're the listing agent. Yeah, I mean, it could be a tactic. It could also be they just didn't get an opportunity to do the stuff they needed prior to, the inspections just took longer, and therefore it affected their ability to get it to you any sooner. Is there something else going on, right? I mean, what other contingencies do they have outstanding? Is that the only one? If that's the only one, then the quicker you come to an agreement, the better off you are. Or do they still have other ones out there? So there's a lot going on with that question. I don't know if it's just, super easy to come up with a simple answer on it, but I usually have conversations with the buyer's agent, and take it for what it is, right? Try not to read too much into it, but it should be something that you should, even if they submit it on the last day, you should be able to get to the bottom of it within a day or two. If they're continuing to drag out for different reasons, then maybe you have something more going on. All right. All right, guys, here's what we're going to do. We're going to answer a couple more questions. My voice is starting to go because I'm on here by myself. So I'm going to try to get a couple more. Then we're going to exit stage left. Do homes appreciate in recession? So out of the last 9 recessions, I think prices have either gone sideways to up during those recessions. The last major recession was 2008. Home prices actually went down, but the housing market actually caused the recession at that time. So the housing market was the cause of that recession. And the other time when prices went down, not nearly as much, was also caused by the housing market at that time as well. So I don't, overall homes continue to remain pretty stable during recessions. It's a fixed asset. People park their money into fixed assets, especially in recessionary times. So the majority of the time, homes, the prices remain stable. Any thoughts on the Tampa Bay real estate market? No, I don't have any thoughts. I don't know Tampa well enough. I talked to a buddy of mine yesterday who is in Orlando. He's in the home building business. He works for a big builder. And I reached out to him just to say, hey, look, what are you seeing with building out there? Like, how are you being affected? And he basically said the market's slowing, still selling properties. They're just still demand, but the market has slowed. But we're not seeing any huge cuts on prices at the moment. So in Orlando area, remaining pretty stable, although, it is slowing. I don't know enough about Tampa to be able to give you any info. Cindy, do you know historically how long a recession lasts? 11 months, I believe, is the answer to that question. On average, 11 months is the average. But what I would say is, when the economy expands, in good times, it's usually like a 3.5 year period. And then recessions usually last up to about 1.5 years. But on average, I think it's 11 months. So hopefully that is helpful for you. So we're going to end on that note this week, guys, just because my voice is going here from talking so much. But I want to thank all of you guys for being here, continuing to support me, even though Josh isn't here, continuing to post on videos and ask questions. All of that stuff matters. It's the reason I'm here. The reason my family's at home eating dinner without me, because I am here to provide some education, to teach, and hopefully provide value. So if you haven't already, I would ask that you hit the thumbs up if you found any value tonight, and subscribe to the channel if you're first time here or if you haven't already. And then next, we will be here next Wednesday for 2 hours back at 5:30, closer to the Fed funds meeting. We will update you on what is happening in the economy. And in the meantime, listen to the Educated Home Buyer podcast if you haven't already. We've done a couple episodes recently on, the market forecast, what's going to happen with rates, all of that good stuff. But go back and listen to the beginning if you're wondering about buying houses, why it's important, all of that good stuff. But for now, I appreciate you guys being here. I appreciate the continued support, guys. All right. Till next time. Adios.